Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is the 3rd of June. We're hanging out on a Monday as a little bit of mixed action today in the market. Big sell-off over in tech. Facebook, Google, Netflix, all taking a pretty good beating here today. Bounce back in certain other areas of the market. Is it enough to turn things around? I don't think so, but we saw a little more mixed action today than we saw, pretty much last week, right? So welcome out, everybody. Hello, Micah. Hello, Melissa. Great to see you guys. Hope you had a great weekend and a nice day here trading as well. Always great to see you guys. Here you can see, just taking a quick peek at the heat map, most areas were able to find their way into the green. It was really the technology sector, the credit services like Visa, MasterCard, PayPal. They were all down pretty big and kind of messing up their charts here today as well. Did have a decent little move over in the material sector. Maybe there's a little bit of fight left over there. And good afternoon, Linda. Great to see you. As always, just a quick note before we get going. Of course, we do have our STEP webinar getting ready to go here in just about 48 hours, just over 48 hours, probably about 50 hours from right now. So that is Wednesday night. If you haven't had a chance to check that out, I would certainly encourage you to do so. Hope we see you over there. Should be a lot of fun and very insightful. With that said, on the earnings side of things, really liked this going into tomorrow's open. Just a handful of names. Tiffany is reporting. You have Box and Coop reporting. No S&P 500 companies, though, for tomorrow. So we'll see where those ones take. It's not huge names. Not going to be a big earnings day tomorrow, it doesn't look like. So over in the S&P, and good afternoon, Adib. Good to see you, my friend. Really, as you can kind of see, just kind of was a drifty type of a day. Really broadly speaking, didn't do a whole heck of a lot. So when we look at this on the daily chart, we can kind of see that after our initial move to the downside early, really quite a bit of back and forth in the S&P. Now, with that said, we still have a little ways to go before we're testing some support, but we're fairly close on that intraday. I've got it around 2720 for that first level of resistance on the S&P. I think it's best that we call it a zone as opposed to specifically 2720. But we do have a little bit of history from the past there. Beyond that, much like kind of the Dow does right now, we've got a lot of space, a lot of clear air if this little swing support level does give out. So no real reason for the bulls to probably be celebrating market-wide here today. Maybe just taking a little bit of a breather, if nothing else. Good afternoon, Emily. Great to see you. I hope you had a great weekend. On the resistance side of things, realistically speaking, I think you have to be getting back above 28 before you can become bullish on the market, at least as the chart looks here today. There are still things out there. There always are things out there, right? There's always something moving up. There's always something moving down. But much like we've been for a while, still with where everything is from a technical point of view, I still think we have to be skewed to the bearish side of things in this market. Go figure, right? That's really going out on an island there. So a little bit of a doji, same type of price action on the Dow Jones. Little bit of back and forth as we're kind of fighting our way, and we had some areas actually moving, up today, whereas last week a lot of days it was just down, right? Everything was just down. So that did lead to a little more of a doji type of a day. Like we've talked before, anything can potentially end up being support, but there really isn't anything, in my opinion at least, until we get into that 24.2 range. We still have room to the downside over in the Dow Jones as well, whereas we got a little bit of old support, in play potentially for the S&P. I don't really see that personally on the Dow. And good afternoon, Scott. Great to see you. Hey, Nicholas. Good to see you, my friend. Hope you had a nice weekend. It goes by quick, and May seemed like it was going by slow, and then all of a sudden it's June, and now I wonder what happened to May. So, but really not a lot of support. On the other side of things, I think we have to use this old resistance level at around 25.2, along with these falling moving averages, before we can kind of say, yeah, that's a nice bullish signal. So any move to the upside, I'll be looking at more as a bearish retracement opportunity, unless we take out those resistance zones. Then maybe we can have a different conversation. The big mover on the day, though, was tech. I mean, tech got hit hard. It kind of hung around a little bit last week after breaking that 72, breaking the moving averages, all of that stuff there on Friday. Boy, it really got moving here today. And unlike the rest of the market that was just kind of doing its thing back and forth, nothing too dramatic, we were just bearish all day long over on the NASDAQ. We did have, that nice green candle to close the day. I would suspect probably some short covering with the way that the price action went here today. And it's beyond just the NASDAQ. A lot of these charts, a lot of the tech companies that maybe hadn't broke support were showing at least a little bit of neutrality, broke down here today. So I think this might be an area that has some trouble. Now we do have some support around, and I'm just going to call it around 7. I know we are technically below that right now, but we do have a little bit of support. We've had old resistance points, we've had support bounces, we've had breakdowns, we've had support bounces, pullbacks. So in this 7,000 area, we do have a good amount of history. We're a little bit below it here today. If this zone gives out, and you could argue that it has, I would argue that it probably hasn't just yet, but we're close one way or the other. Much like the S&P, there's just not a lot. Lots of little anythings that could potentially catch us as some support. We have an old little level of resistance and an old low and things like that, but no real support to speak of until we get down into the mid, into 64, 50, 65, somewhere in that ballpark. So still lots of room to the downside if we give out these support levels. And good afternoon, Patricia. And hello there, Lauren. Great to see you as well. Hope you're doing well. Good to see you. Welcome out. Over in the rut, a little bit of a bounce back day. So, it was kind of boring, closing really flat on the S&P, on the Dow, and on the rut. And then you see the NASDAQ, and oof, pretty ugly, no doubt about that. Catching a little bit of this support at that 14.55.60 zone that we've been kind of looking at as of late. There's some history there. Now, I don't think this is a strong enough support to say, yeah, I'm going to buy the rut by any means. But we've held up a little bit. If this zone gives out, probably 14.40, 14 and is that next level. There's going to be lots of little steps into 14, and then from there, a lot more room to the downside. So we have a few little price areas that potentially could act as support catalysts on the rut. No real reason to believe that the technicals have turned us the other way, I don't think right now. 15 approximately, that breakdown point, that 9 EMA, that's going to be the resistance that I'm looking for. So we're going to be working into this week with some really interesting opportunities, potentially some bearish retracements going on out there. Although we're one day, we'll see if we can string together 2, right? It's been a couple of weeks since we strung together more than one up day. So we'll see if that's able to, if we're able to do that this week. So that's where we find ourselves. Over in the indexes, not a lot changed for the most part, but quite a bit potentially over in the NASDAQ. Tech really showing a ton of weakness here today. Our big winner on the sector side of things was the material sector. And this is one of the areas that I think you could argue is saying, hey, we've got a little bit of a bullish signal here today. A lot of areas were up on the day, but I don't think they're showing, necessarily bullish signals. Closing back above 54, reclaiming that 9 EMA, and even closing above the 20 EMA here today over in the material sector. That, of course, always warrants a quick peek into some of the big names within this space to kind of see where they're at. Some of the companies that are showing a little more neutrality, we had a lot of movement over in Lin here today, creating that higher low, still has some resistance, but more importantly, I think we can say holding its overall upward trend. ECL continues to push resistance as well. We have some things that aren't going to be looking as great, more of a bearish retracement type of a pattern potentially. over in Sherwin-Williams. We've talked a lot about this. This has been, more skewed maybe in my mind to the bearish side than the bullish side, but there have been things that have shown at least neutrality, if not a little bit of bullish nature. APD, another one knocking on the door. So, I mean, you look at things like, APD and Lin, these are things that could, at least in theory, as early as tomorrow, break resistance, right? I mean, that's probably not an easy thing to do. I probably shouldn't just assume that's going to happen by any means, but we're close enough going into tomorrow that we could, it wouldn't be out of character from how much we normally move. So you did see some decent movement over in the metals as well. Now we've got some work to do on Nucor. That's not a chart that I'm going to want to buy ever, for better or worse. But a nice solid day here today, very extended to the downside, could at least use a bearish retracement. But on Newmont, after breaking out on Friday, carrying on that momentum, on the other side of it, you still have things like LIB that's very clearly still in a downward trend. Things like PPG that broke down on Friday, never really any follow through here today, but still has lots of work to do. So it looks like we're still pretty mixed to my eyes over in the materials sector. I'm still open on either side of the coin when it comes to the materials sector. On resistance, I think we have to respect this 55. We saw that swing. That's where our 200-day moving average, I guess it's just a little north of 55 here at 55.10, it looks like. Beyond that 56, we know we've got a lot of history at that 56. Probably don't want to get too excited, but I think you have to say this is at least a little bit of a bullish signal on the ETF. It was able to break the breakdown point, close above the 9 and even the 20 daily SMA. So at least a little bit of technical strength, maybe not enough to make me want to be a permabull or anything like that, but certainly relative strength to the rest of most of the rest of the sectors, at least the sectors that aren't the more defensive utilities and real estate and whatnot. Over in energy, a little bit of a bounce back day, but not anywhere near the signals or potentially beginning signals that we saw over in the material sector. Big breakdown. Don't really have any reason to believe, this is a great time to be buying into energy in my mind. We have to, I think, look at this 61 as kind of that first level of resistance. And we've kind of talked before, it's not a lot of history that this ETF has at the 61 range. It's just big history. It was a big turnaround point when we hit it back last year. So I think we have to kind of keep an eye on that. Quite honestly, that would have to happen for me to even think neutral. I still am on the, looking only bearish within the energy sector right now until we start to see some signals. I'm going to continue to feel that way. We did see some decent movement in some of the bigger names here today, but again, you look at an ExxonMobil, that's just never going to be the chart that I want to buy, for better or for worse. The Chevron, after breaking down, did kind of push back into this old range. So I guess that's a positive, or at least not a negative. But Conoco still moving to the downside. EOG briefly hit a new 52-week low today, I believe. Not by much. Oxy continues to struggle tremendously. So you look at these charts, and I guess, to each their own. But to my eyes, there's not a lot of reason to believe that, this movement, if we actually can get it, would be anything other than a bearish retracement opportunity. That is certainly what I'll be looking for. And quite honestly, I think it would be nice to see we are pretty, at least starting to get extended to the downside in some of these energy stocks. A little bit of a bearish retracement wouldn't necessarily be a bad thing if we're looking for new bearish entries within that sector. If you're on the bullish side of things, I think you just have to be careful that there's going to be lots of levels of resistance that you're going to have to contend with. I would rather not deal with them. So over in financials, pretty decent little day. Not a lot to note technically on the ETF. We're kind of in one of these weird zones, right, where I don't know that the ETF's chart is telling us a whole lot. We have talked a lot about it. You guys have seen it in your own travels. A lot of it is the banks have shown some relative weakness, and I don't really think today changes that. JP Morgan still on the breakdown side of things. Bank of America hanging in there by a thread at that support level. Wells Fargo hanging by a thread. I'm sorry, no, they're not hanging by a thread. They actually broke down. It took them all. So still in very, very questionable places. But you do have things like our lows that we've been kind of looking at, showing some nice movement here today. CB, another one showing some nice movement. So again, I still think we have to be careful overall in financial because of the impact that those big banks can have. And to me, at least, those charts aren't encouraging if I'm looking at it from a bullish point of view. But there are still areas, there still are upward trends in certain spaces in the financial sector. Another one that I know we follow, well, I know I brought him up a few times, is AJG. I always want to call him AJ Green after the professional football breaking out of a little bit of a consolidation. So there still is a little bit of strength in the financials, in my opinion. It's just not in the banks. We have to be careful. We have a bearish bias on the market. We're starting to see, some of the big banks not look great technically. So I don't think we want to be too aggressive to anything that we're looking bullish, but there are still some areas that I like. There's still going to be some breakdown opportunities too. I know we've looked at T-Row a few times last week, but breaking support here today. So still a place where I think we can look at both sides of things. I think we have to be very cautious with the banks if we're talking about them on a bullish side of things. I don't like that personally, but there are still areas that I do like within the financial sector. Over in industrials, kind of working right back into that 73 support zone today, using that as the intraday. Again, this was a pretty ugly break. And while still some of the defense companies are looking okay, the NOC, I know we've looked at them a lot, and the LL, the Harris, things like that are okay. The waste management companies are looking okay. Waste Management, Republic Services, things like that. Waste Management actually had a nice gap on the open here today, hitting an all-time high, breaking some resistance. So on that side of things, we've got some pretty interesting looking charts. On the other side of things, we've got things like UTX that's hanging by a thread at the 200-day moving average. You have things like CAT and John Deere that are just kind of hovering within these bearish trends. UPS, they were kind of struggling before the market started struggling. Boeing, of course, still holding that breakdown point here after several weeks after breaking through that. So more breaks, opportunities in my mind within the industrial space. Definitely an area I'm looking at from a breakdown perspective. I know we looked at AME last week, and AME once again kind of closing right below that support level. This little 2-day floor gives out. Who knows the future, but I can just steal that right now. There's just not a lot of support, and this is the type of pattern I'll kind of be looking for breakdowns in general, and certainly for breakdown candidates over in the industrial sector this week. Hasn't happened yet, was able to hold up here today, but I generally like that type of pattern personally. Of course, we saw the big sell-off in the NASDAQ, so to nobody's surprise, that is what we see in the technology sector and in the communication services, and to a lesser extent, the discretionary sector here as well, kind of hanging right around that 200-period moving average. Really on the support side of things, it's really this swing low down here at about $69 that we have to work with. And then again, much like the NASDAQ, we're going to have some space to work to the downside if that support's not able to hold for us. I think we can look at 72 kind of as that first level of resistance. Again, when we're looking at these prices, I'll kind of be watching this falling 9 and seeing how that coincides as well. One of the things that makes me not believe a whole lot in tech, it's just, we're in a volatile market, but so many things have taken an ugly turn. Double top breakdown. We've taken away the trend. As recently as Friday, we were still holding the trend. It was more neutral in my mind, but not anymore. Right now, we failed support. Apple has been kind of lagging anyway, right? Showing a lot of weakness. We did see quite a bit of selling in the Visas and the MasterCards here today. Maybe hasn't broken down just yet, but it's close. It's close below the 50-day moving average, tested its support level here today. Of course, Intel has been showing a lot of weakness as of late. Even Cisco is getting so close. I'm just going to steal that and say, this gives out. Got to call it a breakdown. There's really not a lot of support until that 200-day moving average. Cisco will be on my radar somewhere down the road from a bullish perspective for more of a long-term look, but right now hard to get too excited about it. Adobe, we saw it break out of that little triangle that it set up closing that Friday. That downward movement in the sector here today really drug it down along with it. So just you look at the charts and I at least have a hard time seeing how they can recover quickly. They can, right? Anything can happen, but boy, they're going to have some work cut out for them. If they haven't broke support, they're kind of knocking on the door like the MasterCards, like the Visas. If these support zones can't hold, there's room to the downside. We're going to kind of see that. That kind of lines up with that little swing that swing low we see on the actual ETF. So, at this point in time, I think we have got to be very cautious when it comes to tech. I don't think we should be looking at this as a great opportunity for a pullback. Personally, at least, that's not how I will be looking at things. Not a very safe place. That's a pretty ugly break, in my opinion. Little bit of a bounce back day over in the staples. It kind of felt, we talked a little bit about it. We always will respect the chart, but it kind of felt like they kind of got caught up in the price action on Friday where we gapped on the open and just kind of sold. And really kind of because we were hanging right at that support level, we had no choice to break through it. Nice bounce back day here today. I don't think this sector's over just yet. If we break out below this swing low, I'll definitely start singing a different tune. But right now, I still remain cautiously bullish in the staple sector. Would like to see us kind of get back above these moving averages. So this area might be one of those kind of needs to work up, consolidate, and then make another step, or work up, pull back a little bit, create that higher low, and then make another step. We've got little things. We've got this old support zone. I do think we have to respect it. That kind of acted as our resistance here today. And then we're just going to have all of these different moving averages to keep an eye on. But when you look at this from a little bit of a longer term perspective, while you can't really be too excited about how red last week's candle was, still looks to me like a pullback sitting kind of right between the rising 20 and the 9 EMA on the weekly chart. So still think that there's bullish potential opportunities, a little more of a defensive area than certainly than tech, right? So I think we have to be a little cautious with it, but I don't think it's seen a lot of turnaround like some of the other areas have. If we take a quick peek at some of these things, I know many of them we've looked at on quite a few occasions. You've got a little bit of weakness in PG, but it still hasn't broken its support level. You could argue that it's sideways. You could argue that it could go into the breakdown bin for a potential if the support gives out. There should be some room to the downside. I'll just steal that one right there. But that support continues to hold. Decent movement here today in Coke for sure, working right up into resistance. So this can go on the other side of things into that breakout watch list, right at $50. Of course, Pepsi's been kind of on that breakout list for a little bit. More movement in there today. Walmart has been hanging at resistance, or just south of resistance. So things are looking okay still in this area. The tobacco stocks, not so much, right? They've shown some pretty good weakness. Philip Morris and the Altria Group both showing, not showing particularly well. But the Costco's and the Mondelez's of the world still looking, okay. Although Costco hanging by a thread at that support level, that could change in just a couple of days. So as you can see, the strength of the trends in some of the big names within this space aren't quite what they were just a couple of weeks ago, but there are still plenty of trends that are holding within this sector. I still think that if I'm looking to buy something, it's going to be one of the areas that I'm going to be turning towards. Over in utilities, we of course saw that pullback develop last week. It was really fast. We didn't really get what I would argue is a turnaround candle until Friday, and our confirmation here today. Some nice price action in the utility sector. I think most of us were looking at this, at least broadly speaking, from as a retracement opportunity. Would like to see us kind of reclaim this $59 area. We took it out and we failed it, so I'm not as concerned as I was a couple weeks ago when we hadn't broken it yet, but I definitely will feel better when we get back above it from a bullish point of view. We can now start to look at this swing that we put in last week, these lows, as our support level here. Yep, that's what happens when I draw a line live and in person. You guys know that. Adds a little bit of a swing support level. But even if that gives out, we've just got so much history in that 57 range that really for me to turn on utilities, I'm going to need to see it break that $57 mark at this point. So we probably should keep an eye just because we've struggled at this $59 mark before, but it looks certainly like a bullish retracement opportunity to me, at least within the utility sector. More of the same here in healthcare. A lot of back and forth, some charts that are turning around. You had Anthem, one I'm keeping an eye on, been trying to break out, tried pretty much all last week, tried on the intraday here today, but failed, but still kind of knocking on the door. You've got the Mercks of the world. They're kind of coming off these little trend lines. So still we have some areas that are all right, but then you have Abby V here, and they actually worked into the support zone early this morning. I took a quick picture and threw them up on Twitter, and then that gave out very quickly on the intraday. We really sold very fast very quickly. This is a 15-minute candle, so we really dipped. Looks like there might have been some stop losses or something just below that zone, but we really rallied back. Now we kind of closed right at that support zone, so I don't know that that's the strongest look I've ever seen, but we did rally. We're hanging out on a support level, so there's still going to be things really on both sides of the coin within the healthcare sector, in my mind at least, kind of like the material sector, very open to bullish or bearish. All things being equal, I'll probably usually side with bearish because that's just kind of the market that we're in, right? But I do think there are interesting bullish opportunities, potentially, at least if we could even catch a retracement that could benefit from that, like some of these breakout type of patterns. We do have to be careful, though. There certainly is still weakness out there. We saw the Johnson and Johnson, big breakdown, and while it's kind of hung around, hasn't really done much, right? People haven't been going out of their way to buy Johnson and Johnson after that big break to the downside by any stretch. So still have to be very careful with anything, I think, that we're looking at from a bullish perspective in these market conditions. Certainly a little bit of movement going on over in healthcare right now. And that leads us into our discretionary to a lesser extent. A lot of these companies are going to work their way into the NASDAQ, like the Amazons of the world. So they kind of went along with the, those type of companies went along with tech here today. It wasn't all bad, but when we look at the ETF, we clearly gave up that 112, closed below that 200 period moving average, kind of have this last little line of defense here at this, at this 110 zone with a whole lot of space from where we are. But when you kind of look at some of the individual components, Amazon really hurts, right? When the big names within these ETFs have a day one way or the other, it's going to potentially really impact the way those ETFs look. Amazon's big wherever it finds itself, right? That's a pretty ugly chart. A little bit of a breakdown on Friday, a lot of follow through here today, a lot of weakness in Amazon. Home Depot still kind of chugging along, but you still have things like McDonald's that are holding up. I would still argue a close above 200 is a potential breakout worth taking a look at. Weakness, though, in Nike, still kind of holding, doing this little dance at the 200 on Starbucks. You saw some good movement back into Target after their nice earnings run. They took out that top here today, knocking right on the door of a breakout. Tough one to trade because we've got a lot of resistance kind of just step by step, but did take out briefly on the intraday this most recent swing resistance. So there's going to be opportunities on both sides, but I do think we have to be cautious in this area as well. I don't think it's quite as ugly as maybe tech is, but certainly it's not great. It's not great, but there are still some upward trends in there at this point in time. Just going to be a mixed bag, as a lot of times it is. It's going to have some of those brick and mortars in there too, which certainly have done very poorly and are having a negative impact on the ETF. So that's kind of a stock pickers sector in my mind as well. Real estate, just a little bit more of the same as we push back into this old high. Again, kind of like the utility sector, I'd like to see it get back above that, but this overall continues to be, I think, a bullish area. The utility sector, the real estate, you guys know the drill. These are defensive areas for the market, paying some dividends and things like that. So no surprise that they're holding up a little bit better. But yeah, let's just see if we can push through this resistance zone. That'll make me feel a little bit better on the support side of things. These swing lows down here just below 36 seem to be the first price that I think I'll be looking at if we do fail here at this resistance level. And then communication services, much like tech, and maybe even more so. Really bad day. And that is what happens, as you guys all know, when Google and Facebook have big days. It's going to be that's what that ETF is going to look like. That's why I don't like that ETF as a tradable vehicle personally, because effectively you're trading some weird hodgepodge of Google and Facebook in my mind. Whether that's true or not, that is certainly how I see it. Of course, potential antitrust investigation, that's never a good word. That's never a good sentence. And certainly Google and potentially Facebook looking at that here as well. Very ugly. I mean, Google wasn't looking great before today, but not particularly. Look, don't really have a lot of support till 1,000 in my mind. So there's still room to the downside. I don't know how easy that is to trade, and probably not something I'm interested in, but certainly has a negative impact on the ETF as a whole. Of course, Facebook we looked at this last week. I know it was in the options report, breaking down on Friday, some downward movement here today, and then some more downward movement here today, working all the way into that 200 period moving average before it was all said and done. We did come off of it, but that's not a lot of strength, big volume, not a good look. And so this area is, again, just like tech, we're going to have to be careful. And this has a lot in common with the technology sector in many, many ways. But you did see a little bit of bounce back in Verizon. I don't know what you're supposed to do about that, but you did see it. You saw the same thing in T, but you did have a really ugly break, in my opinion, at least, on Netflix. Closing below support, hanging right at that 200 period moving average. If this little intraday low gives out, I just don't see why someone would want to buy Netflix, at least for a little while, maybe into that 320 range, and again, maybe they will. It doesn't mean I'm right, but it's kind of that last line of defense. That's a pretty ugly break in my mind. We've really established a good level of support. Giving that out here today, not a good look. So again, weak area, and certainly an area that I think from a bullish point of view, we've got to be very, very careful. Probably, in my opinion, at least, a lot easier just to be looking for bearish opportunities within that aggressive space, the communication services, the tech right now, just until it simmers down. And that might not be a long time. It might be a while. Who knows for sure, but yeah, that's ugly, Christian. That is not pretty. And good afternoon, sir. Great to see you on the other side of the market recap. Hope you are doing well, my friend. So things are not looking great over in those really, techie type of places. And pretty much most of their charts are saying, yeah, right now is probably not the time to me. So, but there are some areas, again, we see for the most part, we're still skewed in my mind to the downside. I think there's, more bearish opportunities out there than bullish opportunities, but that doesn't mean that there's still not, interesting bullish opportunities out there. We're seeing them every day. We're seeing lots of, and probably more interesting bearish opportunities every day. But I was kind of throwing up some of the top gainers and losers on the S&P companies that I do on the Tackle Trading Twitter, and a lot of the same names for the 52-week high lows. I'm sorry, the Hershey's, a new 52-week high, the LLL, the level 3, a new all-time high. So there's still plenty of things showing a lot of strength. Of course, and you have things that are, again, 3M was again on the new 52-week low list here today. That's been weeks and weeks in a row, right? So there's plenty of opportunities out there for us. We're still in volatile conditions. We have to take that into account, whether that means, we're taking profits faster, smaller position sizes, intraday trading, whatever that might mean. We have to respect that that's the market that we're in, whether we like it or not. But there are definitely opportunities on both sides as we work into this full week of trading. Over in the VIX here today, not much action going on, just kind of hanging around. Volatility still up there, at least relative to where it was most of this year. Just a friendly little reminder that, yeah, it's trade war stuff is not going away until it's gone, right? Whenever that might be, eventually, whether we just get used to it or it's dealt with, it will. But until that happens, no reason to think that tomorrow is that day. A lot of selling over in the dollar here today. Not a great look breaking the 50-period moving average. We did support here today, but not a pullback opportunity I'll be interested in. Still, I don't really feel comfortable saying bearish on the dollar. I think maybe someone who was bearish on the dollar, let's come back to this daily chart really quick. Somebody who was bearish on the dollar might make the argument that if we take out, this little support zone, there's really not a lot till really probably the 200-period moving average. Wouldn't be terribly surprised if we got a test of that with a little more downward movement, but I'm not really interested in that. I'm still just waiting and might be waiting a lot longer. Right? You guys know me by now. I'm waiting to close these bottoms. I thought for sure we were going to get it last week, and then we didn't, right? Or these tops, I'm sorry. I want to see the weekly break on the dollar. Haven't seen that yet, at least for my satisfaction, I haven't seen that yet. On the support side of things, we got a lot of little things. 97's been in play. We do have, some history, but support zone does give out these little lows back here. Not a lot of reason to think a deeper pullback might not be in play into that 200-period moving average. I don't feel comfortable with trying to play bearish on the dollar right now, but I certainly wouldn't want to be bullish, at least from a swing perspective, just yet. Now, if we catch some support, maybe something can develop, but right now, not a great look. Taking out swing low, failing at resistance. It's hard to like that chart to me, at least, even though I overall don't mind the dollar. I don't think that chart's very safe, I guess, a very safe chart to be trading right now. Over in the metals, gold just keeps on keeping on, taking out yet another level of resistance. Boy, this one went quick. We saw our buy signal. We saw folks jumping in. We took out resistance, took out another level of resistance, actually 2 levels of resistance here today. We're not too far away from that swing high not all that long ago. We looked at this on Friday, and I think it's worth looking at one more time. This was looking an awful lot, and I have to zoom in super close because I have to get rid of all these lines if I don't, was looking a lot like a bullish retracement with a nice confirmation candle to end the month. Some nice upward movement here at this point in time. I think you have to continue to be looking at gold as a potential bull. However you're getting into it, you've had to be fast these last couple of days. There's no doubt about that, but certainly think it's an area that we can look to be bulls in as we're moving forward. Resistance, I mean, we really don't have a lot. I mean, we have our swing, up here at 1350, but there's really not a lot of resistance to note here on gold, and there's room beyond that 1350. It wasn't that long ago, although it seems like it was, that we were in this nice upward trend, and really that 1350 swing that we set up, really there wasn't a lot until into the 1375, 1380 range. So as crazy as fast as it happened, certainly think there's potential, more potential upside. Now consolidation period, build a little, floor ceiling 3-4 days and then break would be nice instead of break and run every single day. But that's where we find ourselves right now. Certainly if I'm looking at the metals, gold has my attention far more than silver, although we did have a decent day. And I think you have to say we saw at least a couple of little bullish signals here on silver develop over the last couple of trading days. We recaptured that 9 on Friday, which is a step, but we took out the swing high here today, broke back above that 20 SMA today, and broke above the trend channel here today. Now it's just one day, and I'm not going to get excited. I still much prefer gold if I'm talking bullish, but I do think this has to take a little bit of the bearish bias off of silver if that's kind of where you were looking at it. Now, again, we kind of talked a lot. I think at this point, it really has to be back above 15 for me to be interested from a bullish point of view. If we work into these averages, maybe I can look for some selling opportunities, but you do have to give it the credit it deserves. We have seen at least a little bit of strength. This has been the first time in a little while that we've actually been able to break, the trend, close above those moving averages, recapture the momentum on that 9 exponential moving average. So, not enough to make me want to buy. I much prefer gold from a buyer's side of things on the technical front, well, on the fundamental front too, but we talk technicals here. So, but a good solid little win for the bulls here today. Resistance wise, hey, maybe you don't feel the same way. Don't really have a lot. We'll have to look at the intraday here, but these moving averages, the falling 50 that just crossed over the 200, certainly worth keeping an eye on. For me, it really is the 15 though. That's going to be the number that I'll be looking at on the resistance side of things. More downward movement over on crude, a little more of a back and forth day, but just another day where the bulls are not interested, taking out that 54 on Friday, just kind of continuing in here today. We're beat up in crude, and a little bit of a retracement or floor drop would be handy, kind of like we saw here, 3 or 4 days and then break the floor would be nice if I'm looking for new entries into crude at this point in time. Probably looking at the next level of support at around $50 is kind of where I will be keeping an eye on for that next level of support. On the resistance side of things, really I'm going to be looking at the falling 9 as kind of the first level of resistance. But while that's catching up, 56 is where I have my first level of resistance, and 58 is where I have the second level. But I'm going to kind of wait for this falling 9 to work its way down. It's catching up quickly, and I would expect that to be a potential resistance catalyst as well. But we're still a couple days away. That's at least going to need a couple of days. Again, much like energy, in my opinion, it's you're a bear on crude or you're waiting for some buy signal so you can be a bull. I just cannot see the bullish argument from a technical point of view on crude right now. We had it not too long ago, right? We had that pullback, but that was a long time ago technically, right? Anybody who was looking at that pullback opportunity was a reasonable thing to do, and I wouldn't fault anybody for that, but that's a long ways away at this point. So for me, it continues to be bear or monitor. I can't get behind wanting to buy into the oil right now. And probably the biggest technical on the commodity side of things today, even though it's not nearly as exciting to most people as gold, is our natural gas. We actually, I would argue, for the first time, actually broke this old support zone here today. As you guys know, I was kind of looking at that little low that we put in on the first, when maybe it broke down. Some people were saying it did. I was certainly not one of them. For me, I would say that this is a clean break below that support zone. So any hope for a turnaround, well, it's going to have to recapture that again. And I don't really expect that to be easy for it to do. Energy, as a whole, showing tremendous weakness, breaking a major support zone, at least in my mind. And I know I'm certainly not the only one who's been keeping an eye on that support zone. We've had different ideas of exactly whether we should buy off it, whether it was broken, things like that. But most traders have been looking at break below that here today, more downward movement. This is a bearish breakdown in my mind. Yes, it's natural gas. And so I think if you're playing in the futures market and you're thinking a little differently than you're looking at a bearish breakdown on T. Rowe Price or something like that. But definitely a bearish signal in my mind. At this point in time, I'll kind of watch all of these moving averages, but mostly the 9 and that 20, which are going to continue to fall to act as resistance catalysts. And of course, this old support to act as some new resistance. A little downward movement. I wouldn't be surprised if this is one of those that can move quickly. Relatively, again, it's natural gas, and so it's not going to be $1.50 on Thursday or anything like that. But in my mind, this is a pretty ugly break to the downside. And kudos to everybody who was playing into the weekly retracement, getting that confirmation early last week, right? I wasn't there because I was, I hadn't felt that the break had been there. I wish I was. In hindsight, I certainly wish that was where I stood. But to those of you who did trade into that retracement, well done, and happy to see that. So, ladies and gentlemen, that is where we find ourselves after fairly interesting day in the market. Not one of the days where everything's running one way or the other. We saw some good movement in a few areas, most of them looking more bearish retracement or a breather than, hey, these are great prices to be a buyer from a technical perspective. A little bit more follow through in some of those defensive areas that have been holding up relatively well. I think at this point in time, much like we've been doing, really now for a month, we're open to both sides of things, but as the trend continues to work to the downside, we always, we should always be skewed with the trend, right? And so there's still bullish opportunities, and I'm always open to them. They're just going to have to sell me on their own merits, right? But at this point, it's a lot easier to go with the flow too. So don't ever forget that. Plenty of bearish opportunities out there. Just the volatility, we do have to continue to keep that in mind as we're moving into probably the month. But at least for this week, probably no great reason to think that tomorrow's the day where we all simmer down. It might be, but probably not. So, ladies and gentlemen, as always, thank you so much for your time. It's always appreciated. I always enjoy going through this process with you. So thank you for joining me here tonight or today, depending on where you're at. Just a quick reminder, once again, we do have that STEP webinar here on Wednesday. So hope to see you guys over there. It should be a lot of fun. Should learn some new tricks over there as well. So you can, if you haven't had a chance to, just head on over to tackletrading.com and you can hop right in, get registered. We'll see you over there. Of course, if you are new to the here, welcome. Great to have you. Thanks for joining us. Be sure to subscribe to the channel and hit that notification bell. Follow us over at Tackle Trading on Twitter. You can, of course, find me at FrankMartin23 on Twitter as well. Let's see, any other notes? It's Monday, so I'll be welcoming some of our new Team Tackle members here on my onboarding webinar this evening. So if you're one of them, I'll look forward to seeing you there. I know some of you aren't. Those of you who will catch this later, thank you for watching. I always appreciate you guys as well. So with that, guys, get out of here. Enjoy your Monday afternoon. Get ready for another week in the market. Kind of do a quick run through those reports. See what we got on the tomorrow. Should be fun week. Should be a fun week, and certainly some opportunities on both sides. But yeah, we're breaking some support. Probably should be a little skewed to the bearish side, at least. I think that's a good rule of thumb. So be skewed to the side of the market of the market that's winning. So thank you all so much. Thank you, Brenda. Thank you, Melissa, Patricia, everybody. It's my pleasure. Thank you guys so much. You guys get out of here. Have a great Monday afternoon, and I will see you same time and channel here tomorrow. Thanks, everybody. Bye now.